Hi, I'm Peter Rose, founder of Longwood Currency Trading. How do you find the big Forex moves? How do you find those big price moves that go on? Well, let me tell you, you don't. They find you. What do I mean by that? Well, before we get into that, you can see it's a little dark out here, and you can hear maybe as I'm talking a little rumbling in the background of thunder. We're getting severe thunderstorms. We just had one roll by. I'm going to play you a short clip of the storm at its height just before I came out here to do this video. So that was a that was quite the storm, and we're looking for another roll of that to come through. So what do I mean that you don't find the big moves, that they find you? Well, that's very true. You can't trade for those big moves. You can't sit there and do analysis that goes, oh, I think this one's going to go 50 pips. Again, I'm talking about a day trader trading the major pairs down the 5-minute chart with ATR of about 5 pips, looking generally for 20 to 30 pip profit targets and hoping to capture 70% of those or so. So a big move would be, 100 pips or 200 pips. How do you find that? Well, let me go back to about 40 of the other 420 some odd videos that I have published so far to the process of trading itself as a day trader on that 5-minute chart. I mean, I don't think it's feasible that on a regular basis that we do carry trades or even for a few days. There's too much variance in the currency market. The leverage is too great, and 20 and 30 pip, 50 pip retracements are not out of the ordinary on those major pairs. And so that's why I said, going into a trade, I look for a 20 to 30 pip profit target. In other words, I think I could probably get there, but I'm looking for maybe 70% of that. But if I can get that 3 days a week, you'll make a lot of money. So what am I really talking about here? I just did a video about consistency in trading. You might want to go back and take a look at that. As Forex traders, the goal is not to make a gazillion dollars. The goal is to become consistent in our trading. And that consistency has to come with a valid win-to-loss ratio calculated over a large sample size of trades and an average win value, which gives you your basic skill in trading in an all-in, all-out manner. That'll tell you how well your intra-analysis is doing. By having that knowledge, then as you step up in lot size, then you can start building positions and staging into them and doing compounding and all kinds of exotic shit like that and have a great time. But you're still not looking in your entry analysis and saying, oh, I think this is a 200 pip opportunity. Now, you may think that, but you can't consider it. You're only going to look at, can I get 20 to 30 pips? Do I have enough real estate in here such that I can get those 20 or 30 pips? And then work on that exercise of manifesting that in reality. And you do that by understanding your consistency. Win-to-loss ratio will tell you your expectation of success on any given trade. As long as that win-to-loss ratio is over 60-40, then you are doing well in your trading. You see a lot of guys that are, oh, I'm 52%, but I make a whole lot of money on the ones that I win, and I lose just a little bit on it. We can't talk about that because that's a really experienced trader doing different things than perhaps you are, and even using really large leverage. Let's just stick to something that's simple, and I'll show you how you find the big strikes later. You don't find the big strikes by trying to push more pips. You trade for consistency. you're looking for maybe your consistent magic number on that 5-minute chart with the ATR of 5 pips is 12 pips, 15 pips, something like that. That's your average win value. And you got to limit your loss to 8 to 10 pips. And I mean, you got to, I mean, if you're limiting your loss to 8 pips and you lose 4 times and you win 15 pips 6 times, you're way ahead, right? It's all about the math. It's all about the probability. And what you need to trade for is that consistent approach of whatever that 60-40 win-to-loss ratio enables you to achieve on a per trade basis, let's say. It's like every time I trade, whether it's a winner or a loser, I make $300. So that establishes your boundary condition on your success. Your boundary condition is $300 on a $30,000 account. So that gives you your baseline. What I've been talking about is a baseline. And you trade for that. I mean, look, if you could make $300 a day for 200 trading days a year, that's pretty good money. That's $60,000 a year. So what does it mean to then have the big moves find you? If you're consistent in your trading and you get into that movement where price is moving toward your profit target, but it's moving there differently than it normally does. Now, that's all stuff that I would have to work with you on a personal basis to try to determine what that differential is. In any event, there's a secret sauce to identifying, oh my goodness, this price has some legs to it. This is going to end up being a runner. A runner is a price that goes beyond where your profit target is. So now you bring into play some of your more sophisticated position management strategies and begin to apply those. And that's where, when you're working with a larger account, you can really make some money. Yes, if you're working with a $30,000 account, you're all in, you're all out. You've got 3 full lots at $10,000 a lot. You could probably do it for $6,000 a lot, but you know, I'm not going to get into that now. You're running 3 lots, and that's what you're going to run all the way up. So you get 200 pips on at $30 a pip. So you did good. But if you have the larger account size, trading capability, where you're trading 20 lots at $200 a pip, and now you get 200 pips on the $200 a pip, now you're talking some significant money. And that is how you get those large payouts. You can't look for them. You can't, because you'll find what you think looks like one of those opportunities, and you'll push the juice on it, and you'll end up losing your account. I've had many occasions where if I didn't dump out of that account, I would have lost my account because I'm hanging into it, because I'm looking too far into the distance. Oh, this should go to here. No, it shouldn't go to there. It should go to here because it's only another 15 pips. I have a far higher probability of successfully determining whether that price is going to go 15 pips in the direction I want it to go in than it's going to go 40 pips, let alone 200. There's no ability to judge that. As I've said many times over my videos, your ability to determine how much profit you're going to make is -%. There's no way you can determine how much you're going to make. The only thing that you can quantify in your trading is how much you can lose. That's it. So that's why you can't look for the big run, because you have no control over how far that price is going to go or whether it's going to go up or not. But you can control your risk. So if you can control your risk, that means that you are being able to consistently earn that, whatever it is, $300 a day, $800 a day, $50 a day, whatever it is that your bank is allowing you to do, which represents X number of pips that you're able to achieve. That's your consistent trading. And then when the big dog finds you, when that big move comes, when that big wave all of a sudden is on you, you don't know whether that wave is going to be the one until it's right there. And you won't know whether you're in a runner until that price is running. And you have to be really experienced at that point to make the decision, okay, I'm not only not going to get out of the profit target, I'm going to let this price run. And not only am I going to let it run, but I'm going to start aggressively adding to this thing, because you don't know how far it's going to go. So you got to start loading in. But you have to be very careful, because if it flips around and goes 10 or 15 pips below you, and you've gone in with 8 more lots and you only started with 4, you're going to be 8 lots underwater with a 4 to make up for it, and it's not going to be pretty. It's not going to work out good for you at all. So can you find and determine a big profit move in your Forex trading? No, you can't. But it will find you if you are a consistent trader. That's the key, to be consistent in your trading. And clouds are getting really dark right now, and it's going to start raining any minute again. So I'm going to close it up and close the windows. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.